Hey, Steve Zonardo here with Remax Experts, Zonardo Associates. Just a real quick update on the market. Current inventory, we're at 10,281 units with 1,086 selling. So very similar to last week, plus or minus 100 per category. Again, not the inventory dump that we are expecting just yet. Again, this is something we're kind of looking at right now because we're still facing bidding wars right now with the lack of inventory in specific areas. So we'll see what happens. Clearly, we still feel like debt has not been solved in Toronto, so there's going to be some sort of reckoning at some point. Again, this is what my feelings are. Kind of moving forward, what to look forward to this week. Oh, mind you, even with regarding our businesses, we sold 2 listings last week, one over the weekend, which was a commercial unit. The other property was sitting on the market for a couple of weeks, lowered the price, and then ultimately got it sold. This is the process right now. We have a few more listings coming out, and those ones will be set up. One of them has a bidding war, and we're going to see the other one. We're going to price it a little bit higher than market value and kind of see where we end off there. That's pretty much it. Also, the Florida business is going well too. We did 2 deals last week also, so this is quite flowing in both markets at the same time. I think for this week here, what we got to look forward to is number one, Bank of Canada's meeting tomorrow. Today's Tuesday, so tomorrow. Happy Easter, everyone. April 12th, so they're meeting April 12th, which is here, and that's another interest rate announcement and monetary policy report. So we'll see what happens with that. Well, I don't think they're going to raise the rate. I don't know. I think they're going to hold steady. I mean, ultimately, they held it steady now for the last 2 terms or the last 2 times meeting. If you look at the CPI rate, is at 5.2%. I don't know what this month's going to be, if they're going to, when they report it, if it's going to be higher. We know the housing market kind of took off. It's also bringing inflation back into the market. We'll keep an eye on that for you guys for sure. And I think the article to kind of pay attention to right now, it's kind of got me worried too, because we do all our banking with TD, and I'll tell you why this is a big deal, right? So TD Dominion becomes biggest bank short with $3.7 billion on the line. So basically, hedge funds or other money management companies are betting against the Toronto Dominion to fail. So they bet $3.7 billion on it. I'll tell you why that's worrisome, because just remember, the bank, it doesn't matter how much money you have in the bank and how many accounts you have. They basically only insure $100,000 per account. So let's just say you have 5 savings accounts and there's 100,000 in each savings account. They're only going to insure one of those savings accounts. So out of a 500,000, you're only going to insure 100,000. If you got a checkings account, they'll only insure one of those accounts. And then if you got GICs, those are not insured either. They're only 100,000. So if you got a substantial amount of money into there, you're going to have to do something. Obviously, we're going on the defense now. We're going to kind of move funds all over through TD and also move them out of TD because they can only insure a small portion of what we have. So we're going to have to move everything, most of it, out this week, and just to kind of ensure, because the last thing we need is some bank failure. And then ultimately we're getting $100,000 back from all our hard-earned dollars the last 10 years. So that's the process this week, just a logistics nightmare, but also a peace of mind. Well, let's look at this article, what it says here. So in recent weeks, short sellers have upped their bearish bets against the Toronto Dominion Bank, and now roughly $3.7 billion on the line. This, Canada's second largest lender, according to an analyst by S3 Partners, that this most among financial institutions globally puts TD ahead of the likes of France. So, I mean, they're betting our bank to fail over a French bank, which is, to me, if you think of a bank failure, it's going to be in Europe, not in Canada. So ultimately, right here, this is the most globally shorted bank stock in the world right now. So just remember, TD Bank is affiliated with Blackstone, which is also affiliated with Charles Schwab, and obviously Blackstone interwebs so many companies together. And obviously TD Canada has exposure here in the TD US, which is the same company, different corporation, but the same company. And if you kind of look at it here, they own 10% of Charles Schwab, which lost, I believe, like $40-odd billion. I think it's $47 billion just recently with those bank debacle that just happened just in the last month here in America. So that's one thing. But what scares me more is that they're even betting against it because it's the most leveraged bank on Canadian mortgages out of all the other big 6. So it says here, this gentleman here, Royington, says some short sellers have Also have zoned in on the TD because of its roughly 10% stake in Charles Schwab, which recently lost $47 billion in the market as it came under scrutiny over the unrealized bond losses, as well as TD's position in the housing market, where variable rate mortgages are common and consumer insolvencies are on the rise. So we don't see any of this in the news naturally. Insolvencies are on the rise. So what worries me is that their position, obviously in Canada, with their most of their book is on residential mortgages, and also talking to TD clients back in Toronto that have mortgages through them, even though they were in a variable rate, and the rates have gone from like, you know, the overnight lending rate run from a quarter, 25 basis points to 4.5%. You can see the stretch there. Their mortgage payment has not changed. So that's one of two things that's happening: is either it's gone all interest, and now they're starting to take back the principal that's paid into the property, because they'll do sort of like a reverse mortgage where they'll start whatever principal that you paid into it, they'll start subtracting their overall interest out of that. So just be wary of that. Check your TD statements and make sure they're not eating your hard-earned principal that for the last 5 or 10 years since you've owned the house. That's pretty much it, guys. We'll keep you posted on any other updates here regarding obviously the banking rate, and we're going to follow closely TD because we have a lot of exposure with this bank, and we'll go from there. Have a great day, guys. Ciao.